Okay, welcome. Self-employed borrowers, you're going to get a lot of value of this new this loan program that offers you some opportunities that you may not have known about. So we have Mr. Michael Paz. You want to briefly introduce yourself?
Hey guys, thanks Louis for having me. I'm a mortgage broker based out of Virtual Lending. We service with over 62 different banks, and we have an exciting new program for self-employed borrowers that allows them to put only 3.5% down to qualify for a mortgage. So you guys are going to stay tuned and find out how to take advantage of this program.
Yeah, so definitely if you have questions or comments or anything, feel free to comment, like, subscribe to this channel, share the video, and we'll make some clips about it. So go ahead, Mike. Why don't you tell us about the FHA profit and loss program?
So this program is very unique. It's one of those programs that comes around and your mind is kind of blown when you see it because it almost sounds too good to be true. So, when you're a self-employed borrower, you have two different options to qualify for a loan. The number one and most popular option is to just provide a full documentation loan, right? So, sometimes this, I would say 99% of the time, if you're a business owner, this hurts you, right? The main thing of being a business owner is you want to write off your taxes. You have business expenses that you want to write off. So at the end of the year, when you file your taxes with the IRS, you're not getting slapped with $20,000, $30,000 plus bill that you owe the IRS. So in order to reduce that taxable income, you need to apply your business expenses, right? So business expenses are across the board, different business expenses for different businesses. This loan allows you to qualify without tax returns. So you don't have to worry about the headache or the stress of having to figure out how to navigate through that whole, loophole of, okay, how do I get my business expenses and my taxable income to be high enough so I can still qualify for a loan? That completely eliminates the need for documentation as
Okay,
far
so
as
so
W-2s or
let's
tax
just
returns.
all right, I'm going to interrupt you. So let's just back up. So a self-employed borrower, a business owner with this program does not need to show their tax returns.
Correct, correct. So this is one of those loans that you can opt in to qualify without tax returns, without W-2s, 1099s, or even bank statements. So it simplifies the process by allowing you to only provide profit and loss statement, a balance sheet, and then if you don't have a profit and loss statement or a balance sheet, you'll need a letter from a CPA to verify that you've been in business for 2 years, as well as they verified that they've done your taxes for the last 2 years. The reason for that is because you can't qualify for a mortgage if you're not up to date with the IRS and paying your taxes. So that's another thing that you have to be aware of.
Okay, so that sounds almost like 2005 and 6 stated income. You can just write down how much you make and qualify. It sounds like that.
Yeah. So this time it's a little different because you do need a letter to attest that you've been in business for the last 2 years. So you're going to need a CPA or a tax preparer to write a letter for you on your behalf with your business license number, as well as a letter to attest that this loan will not affect the operations of the business. So it's similar to a standard profit and loss loan, except a standard profit and loss loan requires 20% down, and this is
Uh-huh.
an FHA profit and loss loan, so it only requires 3.5% down.
Okay, okay. And this, out of curiosity, does the tax preparer or the CPA need to verify the profit and loss statement or just verify that you're in business and it won't affect your business?
No, they don't need to verify the profit and loss statement. All they need to do is verify that the business has been active for at least 2 years. And the way they do that is with your business license number. And then they need to verify that they've actually done your tax returns for one of the last 2 years. They need to attest that they've done them. So basically, just double crossing your T's, dotting your I's, and we're guaranteeing that you're, a good citizen and you've been
Okay.
paying the IRS and you're up to date
Okay.
on your taxes.
Okay. So that's a bit, I guess that's one of the benefits is not as much documentation as regular
Yes.
traditional self-employed loans. And besides it sounds like it's too good. What are the other benefits before we get into the actual?
Right, right. So As I was saying earlier, you have two options. If you're self-employed, you can go full doc. Previous to this profit and loss loan, you can go full doc, or you can do what's called a bank statement loan. And the bank statement loans required a minimum of 10% down, and you needed a minimum of 720 FICO to qualify for 10% down. This FHA loan meets the other standard FHA guidelines, so it's a 580 FICO plus just to qualify. So now we're helping borrowers with less than perfect credit qualify for a mortgage with 3.5% down and only 580 plus credit score.
Okay, so I can have a 580 minimum is the minimum credit score or the minimum credit score that I can have. I can show a profit and loss statement that I create, right?
Yes.
I have a tax preparer write a letter saying that I've been in business for 2 years and this loan won't
Yes.
negatively affect my business.
Yes.
And this loan that doesn't have so much documentation, there's got to be a catch. The rate, what's the rate on a loan like this?
Only catches that the rates are slightly higher than standard FHA. So I'm going to put it in three buckets, right? You have FHA, you have conventional, which are slightly higher than FHA, and then you have bank statement. So this program falls right in between conventional and FHA. So they're slightly higher than FHA and slightly lower than conventional. So the rates we're looking at right now are in the low sevens, up to 8%.
Okay.
Today is February 9th, 2024. The rates obviously fluctuate up and down because they do fluctuate with the market since it's an FHA product. So they can change on the daily basis, but that's what we're seeing, anywhere between 7 and 8%, depending on your FICO score. If you have perfect credit, closer to the lower sevens, and if your credit's closer to 580, it's going to be closer to 8%.
Okay. And then a bank statement loan off the top, I don't know if you have the information in front of you, but around how much would a bank statement loan? Because traditional
Yeah.
self-employed borrowers, a lot of times they don't have the tax returns, so they're going to look at a bank statement loan. What's the rate on that?
Right. So the caveat for the bank statement loan is similar, right? So you don't have to provide tax returns, but you really need to source every single deposit for your bank statements. It can be very tedious if you have a lot of transactions that you're doing with your business. And keep in mind, this is a 12-month bank statement loan, so you're having to really dig deep and dig through all the invoices and all the paperwork and every single deposit. That's a large deposit because every single underwriting um, process is going to want to see where that deposit came from. If it's an excessive amount of thousands of dollars, let's say it wasn't a business transaction. Let's say if it was a personal loan, or somebody that just gave you some money, or you won money at a casino, they're going to want to see sourcing for every single dollar
Mhm.
that comes into your business bank account. So that's one of the caveats of doing a business bank statement loan, is that you really have to be on top of your accounting, your bookkeeping, and your paperwork.
Okay. And then how much higher is a bank statement loan in terms of the rate typically than this type of loan?
Right. So the rates are a minimum of a 1.25 to 1.5% higher, and
Higher.
that's with perfect credit. So let's say if you have a 760 FICO score and you want to apply for FHA P&L, you're going to get close to a low 7%, like a 7.25, versus a bank statement loan, you're going to be somewhere around an 8.75. So that's a good 1.5 higher, which is going to be hundreds of dollars more on your mortgage statement. And on the flip side, if you go with FHA profit and loss, it's going to save you hundreds of dollars on your mortgage.
Okay. The other question, does it allow for gift funds? Like if someone wants to give you a gift to help you with down payment, or that closing cost, is that allowable?
Great question. FHA guidelines apply to this program, so 100% gift funds are allowed. If one of your parents or family members, friends want to help you out, 100% of gift funds for down payment are allowed, as long as we have sourcing and seasoning for 2 months.
Okay. And how about if I want to, buy 2 or 3 or 4 units, if I want to live in one and rent the other one, or if I want to live in one and my brother live next door to me, can we
Yes.
buy units with this loan?
Right. Right. So there's a couple of things to that, right? It's totally possible, and unless you're in that's what's called like a high cost area, like you're in LA or you're in one of those high cost area. The reason for that is because there's something called an FHA self-sufficiency test, right? So that means that you cannot use the other units income to qualify unless you can at least afford 75% of the mortgage payment on your own. right? So that means you can only use up to 25% of the potential rental income from the other units to qualify for a 4 unit or for a 3 unit, right? So that's one of the things that
Oh,
the borrowers need to be aware of. So
so
you
that's
can use
different.
the house hack if you want, but you have to buy very low price, maybe somewhere in the IE, a fourplex, maybe the seller is selling it directly to you and they have to get rid of it, maybe of a divorce, maybe of a probate situation, but you're not going to be able to buy a 2 to 4 unit at market price and get an FHA profit and loss loan just because the self-sufficiency test is there to prevent people taking
Okay.
advantage of the FHA program.
So that's a little bit more stringent. So typically, the 75%, correct me please, 75% of the rents could be used as towards your income for qualification, but with this loan, only 25% of the rents or projected rents could be used. Correct?
Correct.
Okay.
Yep.
Okay. But if like you said, if you go to the Inland Empire, the number one destination for people from LA is the Inland Empire. It's much more affordable.
Yes.
So if someone wants to go out there and get 2 units, it's going to be a lot cheaper than LA for sure. So
Exactly.
let's just say I'm a business owner. I was invited to get a bank statement loan because I don't have the tax returns that show the income to qualify for the mortgage. The bank statement loan is too much. I think it's too much. I'd rather just keep renting rather than buy a property. What
Mm.
should I do? What should I do? What's the pro? If I'm interested in seeing what I qualify with this, or what the payments would be, what should I do?
Yeah, so the best thing to do would be to talk to a qualified lender that offers this program. Off the top of my head, there's only 2 banks in the entire nation that offer this program. My mortgage broker is partnered with them. So, talk to a lender that that you trust, that has experience with these loans. It's a brand new program. It's only been out for about 6 months. So there's a very limited number of lenders and banks and mortgage loan officers that have the knowledge of this
So
product. They might not
so
even have the product available. So talk to somebody that's familiar with the product, right?
so
Number
so
two,
so 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 for
yeah,
call Luis Sanchez, call Michael Paz. They call. Let's just say they call you. Now, what's
yes,
the next? Let's just say we're envisioning. What's the next step for the client? What the client can expect after they call you? Are we gonna?
yes, exactly. So what we're gonna need first off, just to kind of see where you're at to establish a baseline, we're gonna need to do a soft pull on your credit, right? We'll take care of that. Don't worry about it. We'll do a soft pull that's free to the borrower and doesn't affect your credit score negatively because only hard pulls affect your credit score negatively. That's when you're gonna be having a lot of different creditors giving you a call. But soft pulls do not have any effect and they don't show up on your credit report. Just a soft
Okay.
pull. That's number
Okay.
one. That's gonna yeah.
So you do a soft pull on my credit report, and that's not going to affect my credit too much. And
Yes.
just for to keep us informed, why do you need to run my credit?
The reason why is we need to establish a baseline to see what your monthly liabilities are because as an FHA product has a maximum debt to income ratio of 54% on the
Mhm.
back end, meaning
Okay.
your mortgage, your credit cards, your loans, car payments, and everything cannot exceed 54% of the ratio of what your debt to income is. So we'll
I
do
see.
a soft pull. We'll see what the baseline is at. If you're close with the mortgage payment included, or potential mortgage payment included to 54% or less, then you're in good shape. At that point, you're going to have to start the process of doing a self-prepared profit and loss loan, as
Uh-huh.
well as the balance sheet, and then getting a letter from a CPA or tax preparer to prove that you've been in business for at least 2 years and then with your business
Okay.
license number.
Okay. So that's a lot of information quickly. So you said first 54%. So if our family's income is 10,000, then our monthly liabilities, including the new mortgage, could be 5,400. 54%,
Correct.
right?
Including your mortgage payment.
Including the
Correct.
mortgage payment. So then you have our credit report. You're gonna get the profit and loss statement, which I can you help me put that together, or let's add on, you know?
I have a template and I can definitely email you the template and it's just going to cover all the bases, but it's
Okay.
really case by case on your business, right?
Yeah.
There's hundreds of different businesses out there, so you're going to have to plug those numbers in yourself because I'm not licensed to do any type of tax preparation.
Okay. So I plug in the numbers into the template. I get the letter from the CPA that says that I've been in business for 2 years and they've done my taxes, and then I'll give that to you, right?
Yes.
Email it to you?
Give it to me. Give
Uh-huh.
it to me, forward it to the bank, and then we start the underwriting process. Once we get the A-OK from the bank and then the profit and loss statement, income, like which is your net income, because you'll have a gross income and a net income. So they're going to look at your net income after business expenses. You should have some type of business expense in there. You can't be 100% profit business, right? So after they deduct business expenses, they look at the net, and then from the net, you will be able to qualify based off of whatever the net income is. And then I write you a pre-approval letter based off the net income, and we go house shopping. Then you call Lewis, and he helps you buy a house.
Okay. Sounds easy.
Yeah.
Is there anything else? Any other things that would possibly give anybody any hesitation? I mean, it sounds too good.
Yeah, exactly. One thing that you guys need to be aware of as self-employed borrowers or business owners is that these programs come around once in a blue moon, right? There was a program similar to this a couple years back where they did not, it was a full doc program, I believe it was conventional loan that did not require pay stubs. And that program was discontinued because there was too many fraudulent transactions, too many fraudulent loans from loan officers that were taking advantage of that specific program and basically making up numbers, right? And saying that the borrower made a certain amount and there was no documentation as far as pay stubs to prove that. So there was fraudulent W-2s, fraudulent 1099s, and all that good stuff. But now with the new guidelines in place, we're going to be able to prevent that with a CPA verifying that the business is legitimate and that there's no fraudulent activity being involved. But with these types of programs, uh, other loan officers could potentially mess it up for everybody. So I would urge you to take advantage of this as soon as you can before it discontinues and phased out.
Before it fades out. Okay. Okay. So just quick review. So it's a 580 minimum credit score. We're going to need a profit and loss statement, which you're going to generate. You're going to need a letter from a CPA indicating you've been in business for 2 years. If I'm interested, I'll call. Or if the client, the prospective, those people out there are interested, you're going to call us. Then you'll schedule a consultation. Now, would that be over the phone consultation, on Zoom, in person? How do you manage that?
We have it, yeah. So we have an office in Covina. You guys can definitely visit us at the office. You can contact me on my social media channels, Pause the Lender, or you can email me, Michael at virtuallending.com. That's just with the one L. So it's VIRTUA lending.com. Send me an email. Let me know what your scenario is. Let me know how I can help you. And we can take steps to either schedule a phone consultation, a Zoom consultation, however you feel more comfortable. I'm more than welcome. I'm more than happy to help any borrowers get pre-qualified and pre-approved for this self-employed FHA P&L loan.
Perfect. And then so we'll do a soft pull on the credit report, and then after you've looked at that, you'll verify the information, and then we'll put together the whole loan package, right?
Yes, exactly. I'll give you the full package and we'll make it a smooth transaction.
All right. So everybody on YouTube, Facebook, TikTok, whatever platform it is, call it. If you're a self-employed borrower and you thought you had to do a bank statement load and pay a super high interest rate and a large down payment, hey, this may be an opportunity for you. Hey, well, thanks, Mike, for coming on. Thank you
Yes,
for reaching out, and I enjoy your social media postings and following you.
yes, sir.
So thanks a lot.
Thank you for having me on, Lewis. I appreciate your time.
All right.